Tasks in financial analysis. So in this introduction, we will see what are the first tasks in financial and ratio analysis. So we'll try to answer that question. What are the first tasks in financial and ratio analysis? Financial statements and ratio analysis is where we understand the importance of ratio analysis in the various financial statements that we infer in an organization like a bank. So our first task is to make ourselves familiar with terms used in profit and loss statements and in balance sheet, which would help us categorize them in a convenient way in order for us to put them as per the balance sheet equation, capital plus liability is equal to asset, and also in a manner where these terms would factor in the different ratio analysis which we carry out after preparing a profit and loss account, where we interpret profitability ratios, as well as in balance sheet where we interpret current ratio, quick ratio, net working capital, debt equity ratio, debt service coverage, stock turnover, working capital turnover, debtors velocity, net profit by sales, return on equity, as well as return on investments. So these many things we can interpret from the balance sheet and see where the company or the organization is headed towards in terms of financial statement analysis. It is also a part of financial analysis. Next, we'll go through some of the terms which are commonly used in financial analysis. So this familiarity with these terms used in balance sheet is an absolute must, without which we won't be able to know what the balance sheet conveys from an organization perspective. So first is capital. Capital is owner's money or money invested in by its owners, promoters, or the general public. So that is what is exactly capital. And this capital plus liabilities equal to asset. That is the basic balance sheet equation. Next is owner's equity, which is a claim on the firm by owners of a firm, which is self-explanatory. Owner's equity. Next is authorized capital, which is a legally permitted capital which a company issues. That is in the case of issue of shares, etc. Subscribed capital is a number of shares which is subscribed by its promoters as well as its shareholders. That is what is subscribed capital, which is also a very important term in business in balance sheet. Issued capital is that part of authorized capital for which a subscription is invited by the company from shareholders who might invest in such an endeavor. So that is what is issued capital. Now what is paid up capital? It is the amount paid by shareholders towards subscribed capital or called capital. That is what is paid up capital. Net owned funds, which is otherwise called as tangible net worth, is the fund representing free reserves, paid up capital, capital reserves reduced by intangible assets. What are intangible assets? They are assets like trademark, etc., and accumulated loss. So that is what is net owned funds. Capital reserve, which is not available for distribution among shareholders. That is what is capital reserve. General reserve, which is the reserve available for distribution among shareholders, which is created out of profit, which is general reserve. Temporary loans. It is loans repayable within short period from date of loan or repayable on demand. That is what is temporary loans. Contingent liability. So the loans may be an asset for a bank. Contingent liability is basically what are fixed deposits or anything like that. But contingent liability, what is it? So contingent liability is which may or may not happen on the happening of a specific event. So any liability which may or may not happen on the happening of a specified event is a contingent liability which is taken note of in the footnotes of the balance sheet. Next is fictitious asset, which is part of intangible assets. Intangible assets we have gone across. Current assets, which are assets that can be converted into cash in the normal course of business or within a year. Also gross working capital or working capital, which is current assets. What are quick assets? Which are assets in liquid form such as cash, stocks, loans and advances, prepaid expenses, etc. So that those assets is very easy to convert into cash. Now gross working capital, which is total current assets. Net working capital, which is surplus of long-term funds over long-term uses, or current asset minus current liability, which is net working capital. Now next is cost of production, which is cost of opening stock in process less closing stock in process, plus cost of raw materials, stores and spares, power and fuel, direct labor, repairs, maintenance and other expenses. That is what is cost of production. Net profit, which is final profit after providing for expenses and by taking into account the income earned. It is also net profit before tax, or maybe sometimes it is net profit after tax, but mostly it is net profit before tax. Now retained profits, which are net profit minus tax minus dividend declared or paid. What is cash profit, which is net profit plus depreciation. What is cost of sales, which is cost of production plus opening finished goods stock minus closing finished good stock, which is cost of sales. What is net sales? That is gross sales minus returns, discounts, etc. That is net sales. What is gross profit? Which is net sales minus cost of sales. What is operating profit? Which is gross profit minus operating expenses. Now these terms are also we have to be familiar with when we actually see from the balance sheet. Intangible assets, which are assets having notional value, trademarks, etc. That is what is intangible assets. Net worth, also owner's equity, sum of share capital and reserves and surplus, which is net worth. What are some of the uses? Long-term uses, which is fixed asset plus non-current asset plus intangible assets, which we have explained it. Each of the items we have explained. Short-term uses are current assets. Long-term sources are net worth plus long-term liabilities. Short-term sources are current liabilities. So at least these many terms one has to be familiar with before reading a balance sheet, so that you can form all the ratio analysis, and in those equations you can put these values. You can have an idea about what exactly are those terms when we see it in the balance sheet. So hope this was clear, and this we wrap basically the tasks in financial analysis. Thanks.